Hey guys, it's Pilar Newman and welcome back to the channel. In this video, I'm going to share with you my top 5 stock picks for December 2021. Now, if you've been following this portfolio since the beginning of this year, then you are seeing this portfolio take a severe hit due to the high growth stocks that are in this account. Now, before you say anything, I want to share something with you that I learned a very long time ago, and the best way that I can show you this is by showing you the Amazon stock price. High growth stocks are a great opportunity for you to make greater returns in the long run, but they're not like your average stock. Their movements are very wild and very volatile. And so I wanted to just share with you the Amazon stock trajectory here because I want to show you my sort of thinking of why I continue to buy some of these high growth stocks as they continue to fall. So with any emerging market, there is going to be some pushback and some skepticism, and Amazon is no stranger to that. As a high growth company back in 1999, their stock ran up all the way to $105, only to come all the way back down to $8.31 in 2001. Now, any sane person would look at that and say, hey, listen, I'm just going to give up. I'm going to throw in the towel and sell this stock. Well, if you had stayed with Amazon, you would have experienced the kind of returns that Amazon is seeing now. And that's because it takes time for people to get on the bandwagon of an emerging market. Now, if you combine the volatility of these high growth stocks along with economic conditions such as we're seeing right now with the new variant spreading a lot of concern throughout the nation and the stock markets, then this is presenting a perfect storm of opportunity, and that is a buying opportunity within high growth stocks. Now, you yourself may still be too fearful to get into some of the high growth stocks that I talk about on this channel, but for me, I'm actually going to be selling one of my stocks, and I'll share with you which one that is, in order to buy more of a stock that I am very bullish on for the long term. I do not recommend this strategy for everyone, but if you have time on your side, then definitely watch this video for my next top 5 high growth stock picks for the month of December 2021. The first stock pick on this list is DraftKings. Now, I've mentioned DraftKings in the past, and the reason I'm bringing them up again now is because I will be purchasing more shares of DraftKings for this Fidelity Roth IRA account. That means I'm going to have to make the tough decision of selling one other stock, and that stock is going to be the Budweiser stock. So sometimes you can't have all of the stocks that you want, especially if you have a smaller amount of money in your portfolio. So you always have to decide which one do you believe is going to have the better long-term gains, and in my opinion, it's going to be DraftKings. Now, DraftKings is a sports betting company. They are in a very competitive space with FanDuel and some other companies, but the reason I am really bullish on DraftKings is number one, they are in a high trending industry, which is in the gaming and sports betting industry. They are also spending heavily on expanding their services and their offerings, and that includes getting into the NFT collectibles marketplace. NFTs, just like cryptocurrency, is something that I believe is going to be here for the long run, and any company that is starting to expand in these spaces, I believe are getting in very early on the trend. And I think with the current niche that DraftKings is in, that adding NFT collectibles to the sports marketplace is a very good move for them. They are in a very solid position right now financially where they can continue to spend money expanding their platform, but also I am very well aware that if they do need to raise capital, this will depress the share price even further. But for now, I think it's a very good entry point to get into DraftKings. Now, I will say that there is a chance that this can continue to drop, and it could drop very heavily to about $19. And if that happens, that may be a point where I may purchase additional shares of DraftKings. But in the meantime, I'm looking for a share price around $26 to $25. If it falls down even further, and if there is space within this portfolio, then I will go ahead and pick up more shares of DraftKings. Second on this list is Signify Health. They are a healthcare system platform. Essentially, what they do is they help hospitals with in-home evaluations of patients that have recently had some sort of a small procedure such as a knee replacement. So if hospitals can decrease the chances of these patients coming back into the hospital, then that can improve their bottom line. And that's where Signify Health can really help these hospitals out. This is actually my top stock pick for this month, and the reasons behind it are pretty straightforward. This is a high growth company that is showing increasing demand and increasing total revenue as of their last quarterly report. They are a profitable company with a solid balance sheet, and they have a lot of insider buying, meaning a lot of people that are in the company are actually buying stock of this company. So that means that they have a positive view of where they see this company going. Signify Health is a newer IPO, so there has been a lot of volatility with the stock price. It recently dropped down to about $12.50, and I do believe that the price range that we're at now is a good entry point to start building a position within Signify Health. The third stock pick on this list is Encompass Health Corporation. Now, this is more of a value stock versus a high growth stock. This is a system of rehabilitation hospitals, and over the last year and a half, they've seen increased costs due to the pandemic and making sure that they are keeping their patients safe. Now, because of that, they are also predicting with the new variant that they are going to continue increasing those costs. And for that reason, they have lowered their guidance for the coming year. Additionally, they are building out more inpatient rehabilitation hospitals. And so that is all presenting a good opportunity to buy this stock now while the price is depressed. If you are considering this company, there is something very important to take a note of. Now, the company is expecting to do a partial or full separation of its home healthcare and hospice business, and they are planning to do a spin-off IPO. They are targeting the beginning half of 2020, and they will be announcing more precise timing later on in 2022. The company has indicated that it does believe that a full or partial separation of these businesses will enhance the long-term success and value of their companies. Encompass Health is definitely a company to keep on your watch list. If not now, then definitely at the beginning of the year. The fourth stock pick on this list is Zynga. Zynga is a mobile social gaming developer in the high growth gaming industry. Now, you may have heard of or even played one of their more popular games called Farmville. Now, 10 years ago, you couldn't get away from Farmville if you were on Facebook. They were all over the place. So Zynga is the company behind Farmville. Now, the way that Zynga makes money is with in-app purchases, such as trying to get to the next level or buying something else within the app. But more recently, they have started to make money with in-app advertising. As a matter of fact, their last earnings report showed that advertising bookings nearly doubled year over year, which was really surprising. The increase in advertising bookings was a surprise to everyone because of Apple's privacy changes. This basically limited app developers the ability to track users from app to app for advertising purposes. Advertising bookings are much more profitable than in-app purchases. Now, if Zynga can continue increasing these advertising bookings, then you are looking at a really good price point to get in on this high growth stock. Now, there are a few things that will determine whether Zynga actually realizes these gains for its shareholders. And one of the most important things is that Zynga continues to put out entertaining games that people actually want to play. If they can do that, then there's a really good chance that this share price is going to increase from here. Now, the good news is that in the fourth quarter, Zynga is launching a bunch of new games that are primed to bring in more revenue and more users to the mobile app. Additionally, Zynga is doing a slew of acquisitions, including Chartboost, which reaches over 700 million monthly mobile users. That can really turn into an amazing catalyst that can really bump up the share price from here. Last but not least on the list is Leslie's. They are the largest direct-to-consumer brand in the US in the pool and spa care industry. As the largest retailer of swimming pool supplies and products, Leslie serves residential, professional, and commercial consumers. Their third quarter report in August of this year showed that Leslie's had a record-breaking quarter. According to their chief executive officer, Leslie's delivered a record-breaking third quarter, making the largest sales, gross profit, profit and EBITDA quarter in their history. Due to this increase in demand with the in-home pool installations and commercial installations, Leslie's is expecting a long runway of related sales for their pool maintenance services, cleaning, and chemical product supplies to steadily rise in the coming years, and this was all mainly due to everyone staying home from the pandemic. Due to the stellar report, the company raised guidance for the remainder of 2021. They have their fourth quarter earnings report coming out this week on December 9th. I would personally wait to purchase any shares until after the earnings report. Those are the top 5 stocks to buy in December 2021. Hey guys, do me a quick favor, hit that like button. Thanks so much for watching, and I'll see you again in the next one. Take care. Bye-bye.